Hello guys, welcome to the Trading Parrot. Today is Friday morning and we have already formed a double bottom in the context of a CPI report incoming, which markets are already trying to front run. There is though the risk of forming a head and shoulders. I'm going to show you the patterns and I'm going to show you the levels that matter the most, what's going on in the order book, and an update on my short and my long positions. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video? I think it's worth it. It really helps the channel. And I just put out this video which went yesterday live in a stream for elite members. They picked these coins. There's a bunch of other coins. It was over an hour of private TA led by questions from the community, and you're more than welcome to watch it for free every Friday. If you're still looking for an exchange, consider opening an account on 2bit, just 2 minutes to get started. Deposit crypto, withdraw, no KYC needed. Just make sure you use the link in the description to get not just the $50 for free as a welcome bonus, but also all the other bonuses depending on how much you deposit and trade. Today things are quite different when it comes to positiveness. We can see an 8, 7, and 6 out of 10 bullish news. The first one, the most bullish one, is the White House confirms Trump's Xi meeting on October 30 in South Korea. BTC rallies above 111,500. This is in the context of the APEC summit, easing weeks of uncertainty over US-China trade tensions. Definitely the market is taking that as something positive, not just Bitcoin, but the Dow Jones and Nasdaq as well, which reflects appetite for risk on. Reduced trade war fear suggests potential de-escalation. If the meeting progresses positively, Bitcoin could potentially hit 115 and 120. That is what traders are currently pricing in, even before getting the CPI reading. There's also the pardon from Trump to the Binance founder, which is no longer the CEO. Remember, he stepped down a while ago. ZZ signaling pro-crypto political stance, which we already know is currently the case. That's a 7 out of 10, and 5.9 Bitcoin and Ethereum options expired today. The max pain is at 114K, suggests potential volatility. Remember that the max pain is where the market maker can bring in the price, so they have to pay the least to both sides, the shorts, the longs. Nearly 6 billion of Bitcoin and Ethereum options expired today. Is not the biggest number, we have to say, that we have had in the past, with open interest at a record 63 billion across all time frames. The max pain point for BTC is at 114, where the greatest number of options holders will suffer losses. Derivatives, 50 billion open interest showed traders holding substantial bullish bets of 120, 30, and 40 strike prices, suggesting conviction above current levels. The balance put-call ratio is 103, which indicates neutral sentiment today, but a breakdown below 111 could trigger short squeezes, while holding 114 through expiry could accelerate the upside to 116 and 20. Remember that we not only care about the moment it expires, but what happens in the post 36 to 48 hours, including Monday. You can see here CC counting victory. I'm sure that he, invested a lot in America and supporting Trump to get this pardon. Money can buy anything pretty much nowadays. Whether that's a good or a bad thing, that's a different discussion. Is this that hard to imagine? 150 to 200K in Q4, Crypto Seth is saying. He's pointing towards a Wyckoff reaccumulation pattern and pointing that the liquidation event that we have is part of the spring. There's an interesting discussion. Benjamin Cowen, for some reason he has to reply everybody, and I remember the only video I made as a collaboration with him, I asked him offline, what is the worst thing that you hate about crypto? And he said all the bullies and people that are influencers that are just faking their success. And you can see in here, problem with waiting for BTC to close below the 50 weekly SMA for 2 weeks in a row to confirm that the cycle, then you confirm that the cycle is over. And he implies that Benjamin was suggesting to hold altcoins throughout that, which is something that is not really a great advice, obviously. And he's criticizing Benjamin for suggesting that, but actually Ben didn't suggest that. He suggested the opposite. Do not touch altcoins until we spend 2 weeks below the 50 weekly. Remember that the 50 weekly is below 102 now. now and spending 2 weeks around here in past cycles is this area that only offers a dead cat bounce. During this period, Ben suggests that the recovery is good for the altcoins. Anyways, just giving some support to Ben because he really didn't say that, to be fully honest. Bitcoin hit macro phase, has dropped into the bottom accumulation zone, indicating a decrease in speculative pressure. This comes from Axel. In a bull market, such values coincide with periods of position accumulation before the next growth phase. To realize a rally, volatility needs to decrease and there should be no negative triggers in the world for a week. So it's kind of too strong and hold on at these levels without nothing really breaking, and then we can get another wave up. Ted is pointing out that the last 3 CPI data have resulted in a short-term correction for BTC. One was at this peak, and this peak. So far, I will say it's difficult to see here that we are in a similar situation because this has rallied significantly, right? You get that big rally and then the rally tops with the CPI, this tops and this tops. This is a week into 103K and we are at 111, so it's not that much of a rally, or at least you don't see all those green candles that you saw in the previous 3 instances. But if this play out still, regardless of that, it could be that we are in the middle of a dead cat bounce and that we are also due for some correction. Notice that these corrections are not all of them taking the previous low. This is just a higher low, this is a lower low, this is a higher low, so who knows which one we're gonna get if there was a correction, I mean. Mr. Wall Street says that BTC bears tell you to sell and wait for a crash. I tell you 99% chance bottom is in at 103K, 1% chance to retest the 50 weekly at 100K, 120 level is bear's last line of defense. Bulls flip that level and we scale full speed. I kind of agree with that because 120 is more than the golden pocket retracement using the extension from the top to bottom, so definitely at that point we are very close to a V recovery. Being above 120 is gonna bring back all the retail again. I'm not sure I agree with the only 1% chance of retesting that based on which facts really, because in past performance that is what we have done so far every time. So going against the trend of every cycle, I don't think that it stands just a 1% chance. That is being unfair with the past performance, Mr. Wall Street. And there are some rumors of maybe Trump also giving the pardoning to the former FTX founder Sam Bankman-Fried, or Fried, I don't know what you want to call him. I, as usually, ask to my community questions and we got in here a bunch of questions I'm gonna run. Remember that there are timestamps in the description, so if you really wanna cut into the area where I talk about trades and stuff like that, you're probably gonna find it in timestamps later in the video. MJ is asking about gold rotation to BTC, and I encourage you to look into my recent videos because I have talked extensively about gold rotation to BTC. But in a nutshell, I do believe that gold rotation into BTC can happen, but there is the caveat of the timing. That gold rotation into BTC used to happen in the early stages of the market. We have seen gold pumping earlier, and that does help to ignite the beginning, the early moves of the bull cycle. This scenario where you are in a topping year and you have gold rallying at the end of the cycle is not necessarily something that we have full confidence that it has to happen in the same way. Of course, now gold, if it tops, some of that will go into BTC, but if at the same time that gold tops we had some sort of general market crash that pulls all assets down, then BTC will also collapse to the downside. I guess all I'm trying to say is that the pattern is not 100% the same that people want us to believe, that is just perfectly 100% matching the past performance. I don't agree on that. At what price do you see the market confirming a flip from bearish zones to bullish zones and potentially starting to push towards new BTC all-time highs? I think the 117 to 120K is just too overextended to the upside to say that that really is a dead cat bounce. At that point, we invalidate many patterns that are currently looking very bearish, even on the weekly. Of course, going to those prices, it depends what we mean to go into those prices. You can even pinch on the 4-hour 120 and then close the daily at 105, 103. How do you think that's gonna look on a candle close on the weekly and on the daily? Really ugly. So it doesn't only matter monitor the levels you reach, but also what time frames and what candle bodies you're forming with that, because that tells a story, that tells about a sell-off, or it tells about bullish strength. We do want, ideally, weekly candles confirming the story with closes very high, not just pinches, liquidity graphs that then dampen you. If we do reach all-time highs, do you think will be required for BTC and Ethereum to sustain a lasting all season, not necessarily a crazy one, a 5x, 10x crazy degen targets, but a stable and healthy period where altcoins can perform well for a while, similar to November, January 2025? Well, that wasn't necessarily that sustained and that long. We managed to stay in altcoin season for still very short. If we go back in history here to 2025, you can see that we enter altcoin season around December and we already exit 1 week after. So yeah, the altcoin season is not just being above 75. That is just a measure, a lagging indicator that tell you pretty much that you were in altcoin season. Now, very rarely you can stay there for very long, like in May in 2021. If you mean a sustain like this from March into June, that's a different story. I think we were in a different timing in that market. We had less altcoins. There was so much more money injected into people's pockets due to the COVID crash to prevent recession. So I'm not sure we can expect something of that size. But if we really confirm quantitative easing and we get a rotation of gold and dollar, breaks down below $100, sorry, it's already below $100, but it breaks the multi-year support that I refer to so often, it's just too much bullishness in terms of flow of cash that can come into altcoins. And I got a lot of questions about BTC rotating to Ethereum. I need to do that in a separate video. I haven't done an altcoin video. I'm gonna try to do maybe one after this one. Smiley is talking about the speed up of the price. Remember that I talk about a neckline around 116k. At that point, I start feeling like, okay, maybe something is gonna happen and we're gonna get into 120, and potentially if we really hold there and if there's not a sell-off very sharp from 120 with a strong rejection, we could go into all-time highs next. I think 116 is the first level that gives me really strong confidence not to enter. Of course, you don't enter late. So if that confidence is in and I'm still not in a long because I didn't take the long for the third time according to my own principles and discipline, well, so be it. I missed the rally on the long. I insist. To me, discipline is better than profits because discipline keeps those profits. Without discipline, you take a nice trade, which you can put on Twitter and show off to other people that you did the right thing, that you made the money, but you secure yourself a situation of weakness for the future. So across 100 trades, one trade is going to take all of that away due to your lack of discipline, and you won't be able to outperform me because I am with 100% win rate, and you can only achieve that with discipline. It's not to show off, it's to try to encourage you to make the right choices. Did we miss the BTC train, or the next stop is 97k? That is absolutely an unknown series. We cannot tell. I cannot tell. I don't know. We can tell now once we reach certain levels that, well, that was the train and we missed it. But at that point, we don't take the train, or I don't take it personally. You can do whatever you want. If you feel like you're missing the train and you are willing to take a larger risk, a low risk to reward trade, fair enough. JP Morgan says that the Fed will post QT incoming meeting, also hint by the Fed rate cuts are confirmed. Then why the market has not priced in this event? Is the price being suppressed? I think many people are waiting for the CPI and what's going to happen with the rate cuts and all of the uncertainty that comes from Trump pretty much bullying the markets by saying the opposite every day. It really doesn't make it the best way to trade. They pretty much bully everybody in the markets and they pass all the best information to the insiders. So how can people really trade like that? It's very difficult. And I can see people are already looking in my Telegram charts, all updated by the minute. 200 charts have been requested in the past few hours only, and people already can see the 4-hour updated charts, the CPR and everything. Do not miss out and join my Telegram channel. It's for free to pull a few charts a day. The link is in the description. We are starting to get something in here with the aggregated open interest. That is a double bottom, but I have to warn you, this guy in here, this formation can break out and get to 37. That is the line in the sand for aggregated open interest. If we cannot claim $37.5 billion and close above that level, all that we are doing in this area in here is forming a head and shoulders. This is not the one I talked about in the beginning of the video. This is completely separate pattern in here that is not that clear in the price, but it is in the aggregated open interest. Aggregated open interest acts as a leading indicator, so it's a serious fault not to cross 37 on whatever rally we may or may not have in the upcoming days, because getting a rejection from there and coming back into 32, then you get the full head and shoulder there, and that target is to come back into 22. At $22 billion open interest, we were trading at 74K. That serious is the situation. That is just risk, of course. If you get all those bullish aspects and you get to 37 and you cross it, there you go. You get your confirmation that the upside was the right call. Unfortunately, you're not gonna get that confirmation now. You're gonna get it very late when everything will be already very risky to enter. So the right call was to enter at support of aggregated open interest, call it 103K, and whatever prices were achieved with the alts at that point. October is at -2%, so getting very close to go back into the green. And this is the head and shoulders I've been talking about, that you can see it on the daily, you can see it on the 4-hour. Is, not the perfect pattern, it never is, but it's got the neckline right there at the 107K on Binance price, and it's very critical that we break now this 112 and we continue. I think we can do it. Yeah, we're gonna look at what level really in the price we can invalidate this head and shoulders. The target of this, let's look at Binance prices, let's put it right there, more or less. The target is around 100K.4. I'm just gonna leave it there just in case, because we are rolling over in here. We are acknowledging that the level of 112 is resistance. It's been here, here, and here. So we do want to go beyond that level. We do want to take the 114K and then complete the larger neckline at around 114 or the 116. I do have fresh my crypto intelligence dashboard that I have shared with my community. Today it's got a more decent summary. Yesterday it has some issues, but really what videos are talking about today the most are to do with all of these things. Definitely the CPI is being talked about the most. We have 5 videos talking about that, 3 videos talking about US-China trade war, the pardon to CC, 2 videos, and then Ethereum and the credit market collapse. We have 2 videos talking about that and the similarities to 2008. So there you go, guys. I just gave you a summary that came from 38 different crypto channels and videos. Here are all the topics and how many videos on whether there is consensus or not on what they are saying that are being talked about. You can expand this and then see and click and go straight to every single video. Where was that said on a per topic basis or on a video basis? All of that is being shared at the moment in my Patreon community, as well with the Bitcoin status, which now has been updated. We are getting very close on the 4-hour to a resistance. Remember that we need to talk on the daily as well about the double bottom formation that could turn or complete the head and shoulder. You always have 2 parallel patterns, a bearish and a bullish one forming at the same time, pretty much 90% of the time. And it's up to you to identify upfront, ideally both, to understand where is the point of no return where you pick one or the other. So on the 4-hour, the head and shoulder, you can see that we are at the top or challenging the right shoulder. If we go beyond this level of the point of control and we kind of get into 112.3, then we have a breakout on the RSI in here, right? And then we are facing the next level, which is 85. There's nothing left in between. 85 is currently priced at 125K. It's coming down sharply from over 130 every day because we are speeding up as well. The faster we go, this is gonna come lower and we have a lower target. It is a moving target. If it goes below 120, that could be because we are slowing down too much in the move. Then this guy potentially target is below 120, but we do need to cross 120. So speed matters for the target that you can achieve, because we're talking about momentum. It's just physics. If you understand what I mean, let me know in the comments. If you don't as well, as a community, we can all help each other and answer questions. Here, there is the resistance, which is currently 62.77. Let's update it. So it's going to be a little bit lower than I say before. All the numbers are in Telegram. That's 112. Currently, we have resistance at 112 where we can produce another breakout. Careful, watch out. 4 hour has been a party of fake outs. So do not take longs on a breakout on a structure that keeps faking out every 5 minutes. But if you're already allocated, watch out for that breakout, watch out for a fake out, and watch out for the formation of a potential right shoulder with a neckline at 107.5 that can send the price into 100K.4. So where is the double bottom that you're talking about? That is the counterpart bullish pattern that we currently have already formed on the daily, and this green candle that is pushing up in here from a neckline of 110.6, it's already in the daily breakout area intra candle, not confirmed. So if we close like this the day at these highs on a Friday facing a weekend, that is bullish. Ideally over the weekend we just defend the neckline and we don't collapse down with the low volume. Ideally we just hold right there. Now if the daily closes below 110.6 and it just sticks around there, tricky situation, because that means we haven't broken out, we haven't been rejected, nothing bad happened, we just have another go later, which we could break out from here if we want to. We can continue to put wicks up, but candle close above that neckline says the breakout is confirmed. Now we need to follow through. So we have pressure later to follow through with that and not to fake it out. RSI, as I've been saying for the past few days, we needed to move out from the 4 hour, ignore the noise and focus on this structure, which is still bullish. We put a high here yesterday and we continue to the upside. So this still looks bullish. We didn't get a bullish divergence though. Price and RSI looks the same, but we got a reclaim of the daily, which I told you was bullish around here. We could get incoming a bullish cross on the MACD. This last one performed really well. Not all of them performed that well. CPR is coming to the end of the month, and one of my Patreon members wanted to know about CPR levels expected for the next month. You can see that we are going potentially for a second attempt of claiming back the pivots in the month after having touched the last support, number 1 and 2. The call for the next month is that in November we should do the same. Yeah, we went to the top to the second resistance, which was bullish, but it kind of cancels out with post that testing the support. So the reading says we are below it, we are testing this, so we have a bearish reading from the CPR point of view for November. This is not what I think. I'm just giving you the reading of specifically this model, which is isolated from anything else. Where could we get the pivots? The pivots are kind of an average, okay? The key to understand where is it gonna be placed is to just do something like this and think that the average is gonna be somewhere here, and then think about this volatility and then think that the pivots are gonna be spread away maybe more than the month before, which was the squeeze. Or we could accelerate in the momentum even further and get another expansive wave. We were calling for volatility this month because this was so constrained, and we have a decent volatility, right? This is around 24K volatility for a single month. That's pretty decent for an asset price at 100K. So I will say it's gonna remain around the same level because we've been 3 months just going sideways. It's just a matter of how wide it's gonna be. The whole width of this for the months was 31K, and with the 24K, I will expect this to expand a little bit further, maybe into a width of 40K for the month of November. So be prepared for volatility in November in case that plays out. And we continue to build a larger body on the weekly, trying to reclaim 114, 115, but not crossing that and closing on Sunday above that is gonna look like a retest and potential rejection incoming for lower levels. But as I said, most of the bearish patterns that we have in the bull market so far have not achieved the full target. This one achieved almost half already in 102 versus going into 88. So this was 24K and it achieved 12K. So half of it was already achieved almost. For the bears, the ideal scenario is not just getting a rejection, but ideally getting a little bit of red candle. So it looks even worse. The worst scenario for the longs is to go on Saturday here up until 120 and by Sunday getting sold off back to below 110. That looks too much like a week long into the area for trapping longs, and my expectation at that point will be that the next week they get decimated to the downside if that happens. Of of course. Bitcoin at the moment is having a big argument with the bull market support band to try to reclaim it. It's been already this week up until 114 and it got rejected, but now potentially we could close Friday inside it. Is that a big signal that we are gonna regain it? Not yet. It's just an early weak bullish signal if you want, but not necessarily the most certainty at the moment. This kind of close is definitely very overpromising because it crosses the whole range of the bull market support band, starts the week from above it with a large green candle. But this one has so far not done that much. Let's see what CPI can do and the rest of the data. We have some increase in profit taking on Ethereum as the price goes up, very slightly up going, and SOPR is pinching 108, which was the level that was pinched at 4.5k before this crash. So watch out with the profit takers. Bitcoin is also seeing in here some profit taking, not that dramatic as Ethereum, still not as high as 104, but coming back from the area of people realizing losses, now from people realizing profits, prepares us to keep an eye on this in case it goes to the top of this. This you can find it on Telegram, on my charts, or you can get the actual trading view indicator if you purchase one of the subscriptions from the Patreon shop. We are in a similar area with low quality leverage squeeze signals. We have one in here, drop, and now we are accumulating those. Remember that those are low quality. They do not necessarily have to play out. If you look at the previous range, you get an idea of what's going on. Too many longs are being part of this. Speculators around the CPI are coming in and entering big long. We need to see where is that liquidity in the pools to see where they can get hit if something fails for them. The monthly is back above support. That is a great thing. We have less than a week now to close it like this. Closing it like this means the difference between only having an expectation of a revenge rally after if we close below it versus potentially going to the top of the range, which is 78. Since we are above support, let's assume we close the month like this. How high can it be to get into 78 RSI? From where we are currently, the moving target shows 152.7k. That is a weekly target if we hold this support like we did there, and assuming that this time we manage to fulfill what we have done in previous cycles, which is to get to the top of the trendline resistance on the monthly, and hopefully with the help of the lowest level of volatility ever tracked in history. Remember, I am not flipping bullish. I am just giving you targets, technicals, data, showing you the data and everything. There's still some people that think that every time that the price goes up, I get bullish, and when it goes down, I get bearish. Come on, guys. I'm way more than that. That's a big offense. I'm just kidding. But you know, that's the way pretty much the rest of crypto space is, and traders, which are just a disaster out there. At least I'm aiming for a lot of that, and I hope you can see it. If you cannot, that's not my problem. The limitations are probably somewhere else, not here. We got 20 positive inflows into the spot ETFs, very shallow. We are just right there above the all-time high in cumulative inflows. 30 in fear, still one more point, and possibly we can go back into neutral after having spent just a few days in extreme fear. Cerberus still has the signal. I care nowadays about the price going up, because if we go too high, we might remove the warning buy from the unsettled weekly candle before Sunday, so we need to monitor that. In terms of liquidity, now that we are rallying towards here, we are already putting some stress in shorts that enter from around the lows of 108. Right now they are chewing strong and trying to not get a loss. Remember, we have on our short our stop loss at 120.5, so we still have some room for the price to go higher. Let's zoom in this properly, and you can see that probably around here I have my profit taking level defending me, because my average is 122.5, so 2k of profit is just the smallest one I want to get in case we go for a new all-time high to secure it. Why you didn't secure this? Because I had some conviction that we could go for the liquidity that is sitting around the 100k, and you're gonna see if we go there and my short takes a small profit, that again I will take a profit even though I was wrong. And I want you to focus on that, because that is the only way that you can become a sustained profit taker versus one that takes every now and then a profit and then it gives everything back away to the market. It's a big difference, and your ego and the nature of human being goes completely against being like me. You just most want, your sweet cherry all the time. You aim for that, and that is your trap. You know, when they do cartoons and they picture a donkey that has a fishing stick with a carrot hanging and he just continues to rally after the carrot, you need to stop being that. Basically, trading is not about chasing. It cannot be more the opposite. So this is the picture in the medium zoom out from 100k to 124. That wins. Of course, guys, you know, if market maker can make it into 130, then that wins. Fair enough. I could have made the wrong bet, but not at a risk. I'm risk free. Here is how it's looking, the big picture, and you can tell how the shorts are piling up at 127. We don't see necessarily some red on the lower end, but some new shorts, some new longs are piling in here as well. You can see green there, green there. Let's look at the 30-day. We have a big liquidation at 109 and two liquidations at 107 and 106. This, the largest one, is 116, but now you can see that the longs are now compensating and becoming bigger than what you can get from 116. So that is one bearish alpha. It doesn't need to play out, but you've been warned. Price could come back to 109 or possibly maybe into 105 or 6. This is how the order book is looking. There is some resistance at 112, some more at 113 and at 120, 126 and 130 is the biggest with 56 million. Support comes in at 100k and there is some millions here, 20, 27 at 103. Purple whales are not being part of this rally, so don't complain later. I told you that purple whales are not part of this. Many people that watch the channel very frequently want to know that more than anything. Here is your resistance on Binance. The 112, 14 and 18 at the moment are kind of tougher at the moment than the support. That is not necessarily the last call, that the final one to decide, oh, we need to short. It could be just spooking or just a temporary pressure right there before the data is released of the CPI, which is in a couple of hours. CVD still prefers the sellers. It hasn't picked up that much with aggressive buyers. Net longs remain shallow in this area. Shorts got decimated with this level and they are starting to pick up, but not very aggressively. Open interest remains at lows. Interesting. I was expecting to see a lot more open interest as we approach CPI, more players, but we can see that there are not yet so many. Negative funding rates, we had a little bit in here on the 24th. This was at 1 a.m. and that it has helped push back into 111. Longs are coming back down into 60. Let's see if they pull a little bit more, maybe into 52. That could form a local top. You can kind of use the amount of longs and shorts in here combined to understand areas of local bottoms, like the green area when you reach highs, or when it comes too low in here, it means that too many of them are throwing the towel and you end up forming a top. So currently they are throwing the towel, but I'm not that confident that that is enough to really slow this and produce a move back down into 105. Not fully convinced about that, but it has been enough to roll this over. You can see the rollover there. Probably in low time frames you get a breakdown like in 15 minutes or something like that already. The order book looks more in the red, as we saw before in Market Monkey Terminal. There is more ask liquidity, and that reflects as well in high block capital. This is closer to the lower percentile, so there is more resistance at the moment. That could be temporarily, we don't know. Longs are at the largest risk, just 150k, not that much. Maybe that can bring the price back down into 109 or 108 if it needs to. And open interest still has this 113 and 115, the largest bucket, close to the price. Otherwise, it really needs to go a lot higher to 122 and then make me take that small profit, which is not what I want. Fair value gaps, we still have these big ones. There is new ones that can bring back the price into 108. That is consistent with the liquidity pools that we saw earlier that are close to the price. That wouldn't produce a new low, but this price in here has now the responsibility to take this high, which is 114 give or take, and go for 116. That is what price must do now, no matter what, because this low relative to that is a lower low. So this high needs to be a higher high to compensate. Otherwise, you get a bearish structure in here in a breakdown. Watch out with that. I hope you understood. This is just 4-hour price action naked analysis. Guys, I'm gonna record the summary now and I'm gonna put out this video. Thanks so much for watching. Remember to hit the like, subscribe, and write down a comment down below. Those 3 things mean the world to me. So if you're you're taking any advantage of the content, sweet. Thanks for doing that. See you in the next one. Bye bye.